back. Time now for Past Picks, where we travel back in time and take a look at a previous visit from our market call guest. Brett was with us on February the 12th of 2024, so about a year ago. Coloplast was a top pick on that day, COLO. Where's this trading, Brett?
This is on the Danish exchange in Copenhagen.
Okay,
yeah.
And you can see the total return over the roughly 1 year, a little less than a year, negative 4%.
Yeah, it's been a bit of a challenging year for Coloplast. So just a reminder for the viewers, they're involved in ostomy care, continence care, wound care, so very much a healthcare name. If you look at their product suite, about 75% of the revenue comes from products that need to be used in chronic care. So replacement products that are often being purchased. People afflicted with certain conditions need to have replacement parts, on and on and on. They have been challenged a little bit from the slowdown in China, as a lot of healthcare names have. The other challenge with them is that a lot of their products go in place after there's elective surgeries, and just with the COVID overhang, there's been a sort of a depression in elective surgeries as the hospitals have been busy. Now they're recovering. And we're seeing going forward that there are some green shoots happening within the company. So it's probably a little bit early on this one, but over the long term, if you have a company that's in this space and creating these products recommended by physicians around the world, that's something that you want to have. So there's sort of that qualitative demand there. On the numbers side, quantitatively, the dividend's grown over the last 10 years by about 11% per year, and the shares have appreciated by about 12% per year over the last 10 years. So high quality name. Healthcare, I think, is going to see a big turnaround over the next year, 2 years, 3 years, because it had a really strong run through COVID, and then 22, 23 with inventories with China, not a great time. But this is a company that we still own and we're actively buying for our clients right now. Okay.
Number two on that day in February of last year, Telus, one of the big three telco companies in the country. A total return here, negative 8%.
Yeah, so if we look at the big three, if you will, Telus is probably the cleanest dirty shirt in the pile. We saw dividend growth this year, which was different from a Bell or a Rogers, where dividend was paused. No dividend cuts, obviously, for those other names. Subscriber growth is still positive. So when we look at Telus, we're really looking at a company that's going to move from a period of heavy capital expense, building out that 5G network across Canada, to a company that now needs to sort of trim the garden and continue to do well, add subscribers and stick to the knitting and stick to the playbook that they've put in place before. Dividend yield's about 8%. So as interest rates continue to fall, there will be demand for names like Telus because of the yield. And I think relative to some of the other telcos, it's more of a safe dividend, if you will.
Okay. And number three on that day, about a year ago, Littlefuse, LFUS on the NASDAQ. It's a maker of fuses. Total return here, negative 2%.
Yeah, so Littlefuse is a nice little company. It's a small cap, so market cap under 10 billion. Has been impacted, as we talked before, with higher interest rates in the US, has increased their cost of capital. But if you look forward and you see the secular tailwinds around electronic vehicles, the data centers being built out, even alternative energy, all of these new installations of electronic components and electronic devices need to have fuses as fail-safes and as breakers. So we're going to see continued demand for this company. One of the things that's been holding them back over the last little bit has been weak auto sales. The auto market is still somewhat weak, but they're really pivoting into the data center area, and that looks to be a significant room for expansion over time.
That's Brett Girard and his past picks from about a year ago. He's CFO and portfolio manager at Liberty International Investment Management. He'll resume taking your questions on global stocks. That's U.S. stocks, Canadian stocks, and stocks in other developed markets around the world.